Hello and welcome to a demonstration of Trident's integrated planning and reporting solution for aged care. My name is James Wakefield. I'm the Director of Solutions here at Trident, and today I'm going to take you through an overview of who Trident are, why we have a practice dedicated to producing solutions for industry verticals, an overview of what is involved in the aged care solution, and then a detailed demonstration by our subject matter expert, Charles Cooper. So just quickly an overview of who Trident are. We're an IBM business partner with offices across Australia. We have triple gold accreditations as an IBM solution provider across Cognos BI, Cognos Tier 1 and CDM. We bring this expertise in planning and reporting and analytics into public and private sector organisations, and we've worked obviously across aged care, government, financial services, mining and education, just as examples. We've set up the Trident Solutions practice here at Trident because we've recognised that every industry has their own set of unique challenges that require deeper industry knowledge and experience to be able to solve. At Trident, we feel our industry solutions are the result of years of consulting and functional expertise. We've made a big investment in the IBM technology and tools, and therefore we're able to bring this to market with a deep understanding of data and analytics capability. The Trident integrated planning and reporting solutions provide the core tools and capabilities needed by finance teams and manage to get started with business analytics. These solutions can be implemented either on-premise or in the cloud, or maybe a combination of both. It's up to you. Starting your analytics journey with an industry solution doesn't stop you from expanding into more bespoke analytics solutions later on. This is an infographic outlining our integrated performance management for aged care. We believe that this solution can be configurable to any aged care organisation. We've built this based upon our knowledge around the source systems that the aged care industry typically uses, whether your ERP system be Epicor Financials or AIM, whether your payroll system be Chris21 or AIM, and typically you might have a CRM and rostering system. The solution is able to capture the data and structures from those source systems and bring them into our solution, where we're able to perform budgeting, forecasting, variance analysis across actuals, and most importantly, what if scenarios as well, to be able to do best case versus worst case planning. We feel we've identified the key drivers within the aged care industry which you want to be able to see the impact of within your forecasts, such things as your labour costs, your bonds, your occupancy rates, catering, rostering, fees, the growth rates you expect, and the revenue and expense drivers that you've also identified. We're able to allow you to alter these in a true rolling forecast capability, and then to be able to do reporting, analytics, month-end reporting for variance analysis, and operational reporting as well. We're going to take you through the model in detail and give you examples around how you're able to perform these scenario analyses, to be able to do visualizations and dashboards over the top, and how you're able to drill into the detail around each one of these subject areas here, thus providing you a single source of truth for your performance management within your organization. So now over to our subject matter expert, Charles Cooper, to give you a more detailed demonstration.
Hello, and thank you for joining us here on this demonstration of Trident's aged care solution. So first I'd like to start with a quick introduction. Trident have created a performance management solution specific to the aged care industry that includes budgeting, forecasting, reporting and dashboarding. The solution is a true driver-based rolling forecast model, taking inputs from users on such things as the number of residents, average Occupancy rates, roster costs, just to name a few, then forecasts out based on business rules and calculations built into the model. These metrics and rules are all configurable, but the starting solution removes a lot of complexity and dramatically shortens the implementation time, allowing you to generate a quicker return on your analytics investment. Onto the solution itself. So after a user is logged in, the first page that they will see is this, what we call a landing page. From here we're able to go to each individual assumption page, which we see here on the left and in the centre. And we also have a few pre-built reports, net bond flow, expenses, revenue and profit and loss. Also from the landing page we have a couple of extra dashboard reports that have been pre-built. So if I go across to the dashboard tab, then we actually see some financial KPIs. So here we see EBITDA, total income, total expenditure and total staff expenses, as well as a couple of graphs for revenue performance and expenditure actuals versus budget. There is also a second dashboard report called operational, so we can flick across here. So this is more of an operational dashboard on non-financial KPIs. So we can see here for New South Wales we have 507 available beds, our occupancy percentage, number of respite bed days, a few sort of interesting financial performance indicators of profit per resident, staff expenses per resident for the year, as well as net bond flow. A couple of graphs here also, so current year ACFI by state, current year operating expense analysis, so this is a breakdown of each expense type by category, budget versus actual. These two dashboard reports, so I'll go back to the dashboard, are also completely configurable. This is just a base start point and a good place to start. As I go back to the menu, I'm able to access each of our input sheets, and the input sheets are basically what drive each calculation in the model to eventually spit out the expenses, revenue and bond flow. So if I quickly go through the global assumptions by period, you can see it was just as easy as clicking on the button and it opens up this second tab at the top called global assumptions by period, and this has a few different tabs down the bottom which controls global assumptions. If I just quickly go back to here, I'll explain. We have global assumptions, some state assumptions and site assumptions. So we've broken the assumptions up into these sort of levels because depending on the size of your service, the size of your company, if you're nationwide or possibly international, you may have some assumptions that apply to all facilities regardless of where they are. Some assumptions might be state specific, such as if we open this one up, such as and maybe an EBA agreement. Electricity and gas tend to have their own sort of growth rates by state. Payroll tax and holiday loading as well seem to be state specific, so we've allowed for that. And then finally, obviously the most important ones, or the most interesting ones, can be these site assumptions where we actually set each site up. So I'll just go back into global assumptions by period. You can see here, so a more global assumption in these growth rates, CPI, COPO, any CapEx expected or increased CapEx growth. These growth rates can be added here. We also have rates for more percentage rates that can change period by period. So these get set month by month basically. And rates per bed day as well. So we have some percentage rates, some rates per bed day. These will get multiplied by basically by your number of residents, also by your number of days in the month, to create either expenses or revenue assumptions. So as we've went through state assumptions already, I won't go through this again, but we have these state assumptions that can be set by month. We also have a few static state assumptions such as long service leave, and sick leave percentages, as well as payroll tax supplement. And to change between states, it's just as easy as hitting this drop down button. So that was in New South Wales before, now I can see Vic, and you can see my numbers have changed here. Back to New South Wales. Site assumptions is a very similar look and feel. This has a few more tabs down the bottom, as you can see here, however. That's because there's obviously a lot of specific things to sites. So the first tab focuses on the actual available beds. So you can hear we've got a few different types. Residential care, so just a standard care there. Extra services for any ES licenses or additional services, we've got those split up as well. Independent living units we've also allowed for, and offline. This is more just for account of your, so essentially your offline licenses. So you can obviously have a facility that has maybe 120 licenses, but 10 beds are considered offline by the department. So just in case you wanted to track those as well, we've got this offline metric here. Flicking across to the next tab, occupancy. So this one's a bit more detailed because there's obviously, with changes to government legislation, there's a lot of different resident profiles that can be in your facilities at any given time. So the first, we've got respite, that's still active. This is sort of pre-living longer, living better. We have the old split of residents, so bonded, full accommodation charge, fully supported, etc. This is because you may still have some of these residents that have been sort of grandfathered out. And here we have our new world, so daily accommodation payments and resident accommodation deposits. We also have a few other splits down here, transitional care programs, just in case you have any agreements with hospitals. Other, just to catch any other agreements, it might be CRCC in there, and also independent living units here as well. We've also got allowances for extra services, so we've got a couple of different rates, assumed rates here. So this one might be an extra service room with 2 beds in it, and this is a single extra service room. If you have more splits for extra service types, we can also increase the number of licenses here. The number of types here. But this is our resident profile. The next one is extra service rate, and this is where we actually set up how much money per day we get for those extra service residents. So this will just be a daily rate. Final tab, miscellaneous. Here's where we sort of set up the remaining assumptions. So we have a catering rate for standard services and extra services, resident welfare, the same split, maximum accommodation charge, daily accommodation charge, etc. This one here, Act the Uplift, is so if we assume that our aged care funding instrument is going to increase throughout the year, then as far as budgeting goes, we want to be able to forecast that lift. So here's where we can actually set up the increase in percentage there, increase in the daily rate I should say. We've got it by a percentage increase. We could also have that as a increase of amount per day. It's all about how we want to configure it. And finally, we have some bonds assumptions here. So if we assume that obviously New South Wales Facility 1, that's up here, has quite a lowish AC fee, 163,000. Maybe we wanted to change that. Maybe we had a development at New South Wales Facility and that actually gets bumped up. So here it's actually jumped, the average incoming bond has jumped by 20k. What that's going to do is actually increase your net bond flow, increase your cash flow. So those are the assumption sheets. I'll quickly go through a couple of our reports. So the profit and loss. This is essentially just a profit and loss statement, or a pretty standard profit and loss statement. So you can see here we still have our controls up the top of how to change between cost centres and maybe versions or years. So I'm in Queensland at the moment. I might just want to focus on New South Wales again. See my numbers here updated automatically. Also this by default is being shown at quite a high level of detail. I might want to drill into further detail, so I can actually just do that by clicking these little plus symbols here to expand. I've got total income, total expenditure. I can drill right down to total government care and even into the sort of actual accounts. at the lowest level of detail. And then it's just as easy as collapsing those back up if we want to get back to the higher level view. I'll go back to the dashboard and quickly show the net bond flow report as well. So this one's a bit simpler, just a few lines here. So bond inflow, bond outflow, movements in bond receivable, and our net bond flow amount for the month. So here again, I'm just going to change to New South Wales Facility 1. We can see here that across the whole year we've got looks like a few new residents have come in the first month. So we've had a big jump in bond inflow here. Movement bond receivable. So essentially we've got assumptions in the back end of the system that allow us to spread the cash, the incoming cash across the months. So that's completely configurable, but in this case we've got it set up for every new bond. I think we get 60% in the first month, 20% of the cash in the second month, and 10 and 10 in the third and fourth months. But yeah, again, that's configurable, so we can change that to your assumptions as well. Just going to close these and these ones. And so what I thought I'd do now is a quick demonstration on how to actually change your numbers, and then we can see the impact on our profit and loss and net bond flow as well as we go through the process. So the first thing I'm going to do, let's go back to bed types. So I'm going to focus on New South Wales Facility 1 for the time being. So I do have a number of facilities here. They're all available in my drop down list here. So I've got Queensland Facility 2, not many there, New South Wales Facility 2, etc. I'm just going to focus on Facility 1 however. So you can see here this is quite a big site. We've got quite a number of spots there. I don't want to actually change my number of beds, that's not going to change throughout the year, but I do actually want to change my occupancy. You can see here I've got 121 permanent residents, but throughout the year I am going to increase my number of, maybe I'm going to increase my number of bonded residents from January from 10 to 20. So I can just enter 20 residents there. Actually, so one thing I'll show as well is, so there I've actually just changed the base number, but I can create what's called a sandbox view, and a sandbox is sort of your own local view of the world. It's not going to impact, say if you've run your numbers in your own sandbox, it's not going to impact the system as far as reporting goes from maybe a colleague down the line. So here I've got a pre-made sandbox for myself, so I'm just going to go to Charlie. You can see I've already actually made some changes here. So I've gone 5 bonded residents from January. I'm going to change that to 10. So I've now jumped up from 5 to 10 bonded residents out for the rest of the year. You can see I use that little R and arrow. That's a repeat command. I could just as easily have gone 10. I'm going to copy that. That would do the same thing. So I've set my new occupancy numbers, my occupancy expectations. So now I'll go to extra services residents, because I actually want to have a few extra service residents in here. They're going to be single room, so 001A agreement, and they're all just going to be full rate. So I'm going to create 15 new extra service residents. Just make sure I'm in Charlie still. 15 new extra service residents. Again, copy that across to the end. And if you remember, I also have my extra service rates, so I'm just going to give that, that's currently set to 0, so I'm just going to make that $35 a day. And paste. There we go. So I have my button up here to recalculate, so I'm just going to recalculate that, and you can see, so the numbers in blue, what that tells you is that these numbers have been changed and they're different to the base version. So this is what the benefit of the sandbox, I should say. So it's highlighting in blue where numbers have differed. I'm just going to fire into miscellaneous quickly as well, and You can see here, so catering $6.38 up until January, but extra services, part of the agreement was to provide maybe 2 choices for dinner. So the extra service catering rate is actually a bit more, I'm going to say it's a bit more expensive than $7.10, but it only kicks in from January, and it's going to jump up to $10. So I'll just copy that and paste and recalculate, and you can see now the $10 rate's in effect, but also in tow with those maybe those extra service agreements, I maybe also got a big maybe we finished a development and the rooms are looking a lot nicer, so we can actually jump the average bond up to $250,000. Copy and paste. And so again, I've got those in blue. So now I've changed my assumptions for New South Wales Facility 1. I haven't done a huge amount of changes, but you can see it's quite simple and easy to go in. This is so another benefit of this sandboxing is you can actually run very good, very detailed scenario reports, or scenario analyses, to see maybe what would be the impact on my company if I did want to do a development and create more extra service places. How would my new net bond flow look and my cash flow look? But what's the impact on my expenses and revenue going to be? So now I've made those changes, I can actually jump back into the MS dashboard, and I'll fire up my profit and loss report. And so if you remember, those numbers in the side assumptions were showing up in blue when I'd made my changes. So my profit and loss report now, because I've opened a new tab, it's gone back to the base version. I'm just going to change that back to Charlie and New South Wales. And you can see my numbers here are blue. Now, one thing I'll show: total income, resident income. These extra service amounts, actually, that line wasn't showing previously, but you can see now that I've included a number of extra service residents, it's now giving me a forecast of what my extra service revenue will be. That's an example of a number that has changed, but you can see accommodation charge, because I haven't touched any of my accommodation charge assumptions, number of residents, or the accommodation charge rates. That numbers are still in black because that is exactly the same as the base version at the moment. And if I was happy with my scenario analysis here, and I wanted to say, right, there's my sandbox version here is now perfect, and I want to send this back to the base versions to allow everyone to see it, the only thing I need to do here is click my tick to commit it. That's going to send all those numbers back to the base version and change all these numbers to black. So if I go back to base here, you'll see nothing changed when I flick back to base. So these are all now reflective of our scenario analysis there. As far as the demonstration of the system goes, that's about it. So just to finish up, I'd just like to say we recognise that aged care is a complex business when it comes to budgeting and forecasting. We believe that this model can help you complete the budget process quicker and easier, as well as facilitate easy reforecasts throughout the year and reporting as the business shifts throughout the year. So there's a couple of great benefits there. But thank you very much for tuning in, and we hope to speak to you soon. Thank you.